Yo, what's good, guys? I just wanted to go over a quick recap on US30 for you guys. The reason why I want to go over this is because it kind of combines the two videos that I made, how to find high probable order blocks and how to get high risk rewards with a higher strike rate. So I'm gonna go ahead and show you guys this trade breakdown real quick. Now, remember when I said how like context is very, very, very important because of this. Okay, so let's go over it. Okay, so with US30 on the daily, all right, we know that we have a range from this high, from this bullish order block to this bearish order block here. Okay, when price was here, all right, and price broke down here. Okay, actually, we know that our range would be from this high to this low down here as price is coming up. Okay, so with my context, right, is that we sold off from this bearish order block to possibly come and create a new low. All right, okay, because since this low failed to create a new high, that means that this low could have possibly been taken out as price was moving away from this area of supply, this bearish order block here. Okay, we failed to create a new low, and then we bought up from this order block, and you can see how the bullish structure never changed on the daily. So what does that mean for me, right? This means that this right here, this high, is possibly the target, okay, for us to make a new high, because we're still bullish. We came down, we quote unquote mitigated this order block, and then we started to move up and take out, we started to move up, and we're aiming for this high. Now we have that daily context, right, to move higher. Now when you go on the 4 hour, you can see that we took out this high here before we dropped, okay, and then we ran down aggressively. Now a lot of people will look at this and be like, yo, you know, I could sell from this high right here, which you are correct. You know what I mean? You're correct. But don't marry it. You have to have the full higher time frame context in line. You have to have the full story. Okay. Price took out this high, yes. And we had a displacement lower, yes. But you have to see, where did price come from as well. You can see that price came from this daily order block, bearish bullish structure, never changed, right? Order flow, daily order flow, it never went bearish. All right. We just had a short-term shift, right? But as you can see, once we came into here, now what is this is presumed as a weak high right now. This isn't protected anymore. Now you could get some quick sells off of this, right? But your first thought should be, this high can potentially, with high probability, get taken out, even though it took out a high, right? And it broke structure. You get what I'm saying? So with that being said, price did, okay, let's go to the hourly. Price did come into this order block right here, okay? Now, let's go in and see what happened. All right. Price did come into this order block, okay? And you're like, "Oh yeah, now we can sell. Look, we have accumulation, we have manipulation. It broke down, took out a little bit of sell side liquidity. We have a new dealing range, right? Interbank dealing range. We broke down, we started to come up, right? But we broke down again. Okay, so now this could possibly be our liquidity to be taken to come into our bearish order block, which would be somewhere in this area, right? So your mind would think, okay, we could come into here and then sell off, right? Sell off. All right. So we have that context right there. We're playing off of this presumed protected high, right? Off the reaction, okay? If you didn't understand the daily, and you can see that price broke down, okay? Price broke down. Now, when I'm looking at this, I'm not looking to sell here when we came down here, and I'm gonna show you why. I'm looking to buy here, all right? Now, a lot of people, they get messed up and get taken out right here, all right? But I'm gonna show you why you have to have context and have the daily draw, okay? This is your daily higher time frame draw, this high right here. This too, but mainly you have to have in your mind that this is high probability to be taken out. Now, remember on my video, how to have high probability or order blocks. I forgot the title name with it. It's like almost my most recent one. You can see how none of these down candles were ever broken, right? Okay, So you can see that bullish order flow is bullish. All right. Now the only down candle that got broken was here after we came into this bearish order block. All right. So the shift in delivery had changed just a little bit. All right. When we came down, right, where does our mind see? We're still bullish, right? I don't expect price to come all the way down here, right? Because if we start coming all the way down here, having a big reaction, that means we really reacted off of this, and we could start coming. We're really like kind of like in a range. And you don't when you're looking where you're moving with order flow, you don't want to think of ranges like that. You want to think of highs being taken, lows being, sell side liquidity be taken. You know what I mean? I don't expect this to come all the way down here into a discount, because if this is my draw, this high, right, and I'm still bullish and I'm looking for price to make a higher high, I don't expect this to come to a discount. I just expect this to run it. Okay. So with that being said, my areas of opportunity was from this up candle to this down candle. Why this down candle? Because we respect down candles when we're moving up to our higher time frame draw, or moving down to our higher time frame draw. Okay. All right. So let's go to the daily real quick, because I want to show you guys something. You can see how price came down, wicked into it, came up, and kind of did like a bullish engulfing. Now this is a order block. I expect this down candle to hold. Okay. What did price do? It came down into the down candle, kind of the open, went just a little bit deeper, and then bought up. Okay. So you remember that concept of down candle should be respected. Okay. You see that daily down candle being respected. All right. And then you could see how we reaccumulated inside of that daily up candle. You see how this is an up candle before the down move. This is like the breaker of that down move. Even this right here. Okay. So anytime you look to the left, you want to see up candles be respected. Okay. When you look to the left in the market maker buy model, you can see they reaccumulated there. Look, up candle before the down move, they reaccumulated here. Look, up candle before the down move, they reaccumulated all inside of there. Up candle before the down move, they reaccumulated in there. Okay. Now you can see that price came into what? This down candle. Look to the left. Up candle before the down move. Okay. Down candle. So you have these two confluences, right? They reaccumulate where they redistributed at. Now look at this. We came into the bullish order block, right? And we created a new fresh order block with this array right here. Okay, let's do that. This array right here. Okay. Now, low, yeah, this can be broken. Yes, it can. But remember, you want to see down candles be respected. Train your mind to want to see down candles be respected while you're getting to your draw. Okay. When this up candle broke this bearish bullish order block, and you really want to see it close, okay, you can start framing trades inside of your new order block. All right. When we came down here, I'm not looking to sell from here anymore. Take out these highs, because we're overall bullish. All right. If we didn't come to here yet and we went up like this, okay, if we didn't come into here and we went up like this first and then came into here, yeah, I would have sold here. But since we already came into a discount, I want to see higher prices, and for us to take out this high, I don't trust this high anymore, because this is the draw. This is the new draw. Okay. Could we have came from here and then came into this and then sold off? Yeah. Would I have taken it? No. All right. But back to this. We broke this down candle. Went up. Okay. Went up here. Let's scale down. Let's see how we could have entered this. And this is how I enter my trades. Okay. This is putting my two videos together. If you guys haven't seen that video, go watch it. All right. Go watch those two. Okay. Up candle for the down move. What's that? Stop hunt. All right. Let's go to the 5 minute to make it look to see more of the price action. Okay. Stop hunt. Okay, purge, whatever you want to call it, purge and revert. Okay, what do? Okay, we came into this area, this bearish order block, okay, right here, and we sold off. So we reacted to buy orders right here, okay, and we came down. All right, so we bought, they bought up here and sold it, right? We came back into what? This down candle. All right, this down candle right here. Okay, once we do that and we broke up, okay, this is an area where you could start buying at these two down candles right here. All right, once we broke above that, you could wait for the break of structure, but just know you can start buying at these two down candles right here. Some people call this a supply and demand flip. I see this as a down candle coming into another down candle, creating a propulsion block. Okay, whatever you want to call it, this is what it is. Train your eyes to see it. Okay, you can even see it on this time frame. We came into this up candle, we sold off, okay, and then we bought back up and broke it. So I'm looking at that whole 15-minute candle, down candle right there. Okay, can it be inducement? Yes, it can. Okay, I have rules to where like I know when to take these and to not take these. Sometimes it works out. A lot of times it works out for me, and sometimes it doesn't. Okay, I still get my stops hidden, especially if I want to keep it tight. Your safe stop loss will be here, down here. Okay, can this be induced? Yes. Now with propulsion blocks, remember I told you guys, a lot of times it go wick down and take out the low. I mean, not a lot of times. Sometimes it'll wick down, take out this low of the propulsion block, okay, and still close above it, which is good. All right, that's what you want to see. And a lot of times it doesn't. It just comes into the propulsion block that you want to see it get respected. All right, and then you want to see it buy back up. Okay, there was a reason for this move from this high to this low. Okay, there was no buildup of liquidity. I don't see this as inducement right now. Okay, can it be? Yes, but guess what? It's more probable in my eyes for this down candle to hold. So once price came up and broke above this and then came back down into this down candle here, or these two down candles, the opens, okay, that's your position here. You could put your stops here, depending on your plan, or you could put your stops here to be safe, just in case they want to wick down into the propulsion block, below the propulsion block, and then, you know, start buying back up. Okay, and you could call that as inducement. Okay, but usually I put my stops there. Okay, depending on if I do see like some liquidity built up here, I'll put my stops down here. All right, and a lot of times I'll wait for this to get ran. All right, and then your target will be first here, okay, the liquidity built up from this high, this low, to this right here. Okay, break and retest. Retail stops are above, first target there. Okay, you could partial out, and then your second target will be here at this up candle, just in case you think this is gonna sell off, or you could wait to see what price does into there. If it reacts off of it like it did here, you could take partials. Okay, you see a break structure, you could take partials. Okay, and then you could hold to this high here. Okay, so that's an easy 1 to 8. You know what I mean? And if you think what your draw, right, your draw on price is higher because we came into this order block. Remember, we're looking for that daily area, right? Let's go to the daily. We're looking for the daily to make a new high. Your targets can be this high and this high now, if you want to leave a small piece. Okay, so let's go look at that real quick. Here, okay, and then where else? This high, and then the highs above. So up here, if you want to leave a very small piece, which I recommend. Okay, I wouldn't hold huge lots after we take out this high. Okay, I would take out a lot of my majority of my position. Okay, and then I'll hold a very small pieces up into here. And there's your trade there. And the whole time, what was in my mind right now? What did this trade get framed off of? That order block, fresh order block that was created after it came into here. Down candle, okay? Broke above, fresh order block. Fresh bullish order block. I'm looking to frame my trade here. I'm looking for this down candle to be respected. Can it not be respected? Yes. But when your context is bullish, the draw is bullish, you expect down candles to be held once again. And this was held. Alright. So I hope you guys enjoyed this little breakdown. And I'll see you guys in the next video. Peace.